So if you've been following my channel for the past year or so, you'll notice I talk mostly about my Robinhood dividend portfolio and how it impacts me in the present. But of course, when I'm 60 or 65 years old, I definitely don't want to be broke either. So my financial position in the future is just as important as what it is in the present. So in this video, I will introduce you guys to my Roth IRA that I have in Fidelity, and how despite the fact that I only invest $50 a week, I definitely feel like I'm on the right path to financial success as I approach retirement. So I first started investing into my Roth IRA almost a year ago from today, on October 4th of 2022. And the primary reason why I started investing into a Roth, despite already having a traditional 401k with my current employer, is the whole idea of me feeling like I'll make more money in the future. That's important because the money that you invest into a Roth IRA is pre-taxed rather than coming directly from your check, and that money grows tax-free. So let's say I make a lump sum investment to my Roth IRA as a teenager somehow, and I'm making $10, $12 an hour. So I fall into a very low tax bracket. I will get charged that tax. And when I approach retirement at 60, 65 years old, potentially making more to that, maybe even six figures, rather than get charged that higher tax bracket, I would have already been charged that lower tax bracket, and I pull that money out that's been growing tax-free for free. This is something that can be beneficial for a lot of people, but at the end of the day, you have to figure out what works best for you. And for me, I wanted this Roth IRA to work in tandem with my 401k and my dividend portfolio and Robinhood to help me be as financially successful as I can now and in the future. And of course, that all starts with what I'm investing into. Quick disclaimer, I have almost $16,000 in my Roth IRA, and I say I invest $50 every single month. $11,000 of that is coming from two different transfers I've made from two different 401ks from two different employers. So I just want that to make some sense before we get started. But anyway, being a portfolio that's going to last me for the very long term, this portfolio didn't necessarily need to be super risky, but at the same time, I wanted to include a position or two that can provide me some extra growth. With that, my portfolio is split up into four different positions, my biggest position being VTI, or the Vanguard Total Stock Market ETF. So VTI is exactly what it sounds like. It's an ETF that covers virtually the entire stock market. So when I first read into that, my first thought was limited volatility, and with a beta of 1.01, that makes a lot of sense. Keep in mind, a beta over 1 is more volatile than the S&P 500. A beta less than 1 is less volatile. Right at 1, same thing. However, it does give investors a 30% positioning in the technology sector, led by some of its top holdings being Apple, Nvidia, and Microsoft. It also has a pretty low dividend yield of 1.3%, paying out a little over $3 per year per share, and it has been pretty consistent when paying those quarterly dividends. But for me, it was the coverage of virtually the entire stock market that VTI offers, which is why VTI was my first and my biggest position within my Roth IRA. VIG and SEHD are my second and third largest positions, and I put these two together because they're fairly similar in a lot of ways. Both are ETFs that track companies that have a history of consistently paying a dividend to their shareholders. With that, both ETFs themselves have a history of consistently paying and increasing their dividend for at least 10 years. What I do like about VIG, not necessarily more than SEHD, but what I like about it is that it actually does give you some exposure into the tech sector, similar to VTI, except maybe 23 to 24%, and some holdings such as Apple, Broadcom, and Microsoft. But SEHD also just recently underwent a 3-to-1 share split, and history shows that companies that undergo a share split typically increase at a higher rate within 12 months in comparison to other companies that don't. But regardless, I'm really excited to see what these two positions can do for me in the long term. The smallest position I have in my portfolio is Costco. I had a pretty small position of Costco into my Roth IRA simply for its volatility, and this may not be the greatest reason, but I also like the idea of a special dividend that they pay out, even though it's not super consistent, but they did pay one, I believe at the end of last year, at about $15 per share. It does have a pretty positive share price growth history for the long term, so I do plan on growing this position a bit more, but with this volatility, I'm not gonna grow it at the same rate as I grow my other three positions. The dividends that I make in my Roth IRA are just as important to me as the dividends I make in my Robinhood portfolio that I mainly talk about. However, since my Roth IRA is really meant for the long term, I don't necessarily need this portfolio to be as aggressive dividend yield wise as my Robinhood. So the stocks that make up my Roth IRA don't necessarily have to carry a high dividend yield. The ultimate goal is that they pay consistently, and I'm able to reinvest consistently back into my portfolio for the next 25 to 30 years or so. But with that being said, at this point in time, when it comes to my annual dividend income and my Roth IRA, my portfolio would pay me $282.08 between now and this time next year. Within 5 years, it would pay me $470 per year. 15 years, $1,556 per year. And in 25 years from now, I could be looking at $5,457 per year in dividends. And this is all assuming that I continue to invest only $50 every single month, or about $600 per year. I definitely want to work on increasing my monthly deposit into my Roth IRA to $100 a month. And that extra $600 per year would actually increase my 25-year profit total potential by an extra $30,000. So that's a really cool thing. Of course, if you ask a lot of people that know about Roth IRAs, it's ideal that you try to maximize your annual contribution into it, which I believe is around $6,500 until you reach a certain age. And then I think it increases by $500 or even $1,000 every month or every year. For me, I still want to contribute a little bit more into my Robinhood dividend portfolio because I'm still at a fairly young age, so I have more opportunity to make profits and reap the benefits of those profits at this point in time. And after looking at my dividend portfolio's performance in September, I think I'm doing a pretty good job so far. And I'll talk about that in this video, so hopefully you guys get some time to check that out. And hopefully you guys enjoyed this video as well. And until next time, as always, take care.